those that were green significantly outperformed, being less volatile and much less risky, and held their value over time versus those that were brown. So that in the long term will drive capital. Will capital move less quick now compared to the other administrations that could have been elected in the United States? Potentially. Is capital going to move to conserve itself and address, because the risks of climate change are systemic and they're also idiosyncratic? Yes.
That was a snippet from the full conversation. The New World Order is definitely having an impact on the capital markets. Is it good, bad, or rather how bad can it get? And what's the impact? All this and more is coming up right after this. Hello and welcome back to yet another episode on the Mission Shunya podcast. I hope you're doing well. We recently had a series around ESG and we had some good feedback. A lot of them came about once we had a change in the political spectrum in the US. What is the impact going to be? Will the good momentum sustain? Is it the end of the road for ESG, or rather will it be a bump in the road, etc., etc.? So to answer all of this, I called a familiar friend of the podcast, Gabriel Thoumi, who's a CEO at Responsible Alpha. We had a lengthy but a good conversation around all things around the world, literally. So sit back and enjoy the full conversation. Hello, Gabriel. Welcome to the Mission Shunya podcast. Glad to have you back yet again on the show.
It's a real honor to be here again. It's always a joy to chat, Girish, and hear from your audience.
So a few months back, we actually got on a conversation regarding ESG and how Responsible Alpha is kind of working with the various players in the ecosystem and different markets, and what are the challenges that you're facing. Now, looking back, as we record this in end of 2024, 2024 is also turning out to set a lot of interesting records, as some would expect or some would have forecasted. So when you look back, what do you think are the highs and lows of the year?
Well, disappointingly, and not a surprise, 2024 is the coldest year of the rest of our lives. Average temperature is being recorded at between 1.55 Celsius and 1.62 Celsius above pre-industrial levels. Yet at the same time, we find that sustainability and the subcategories of climate and the small category within sustainability and climate of ESG are continuing to grow, prosper, and mature. So while at the global level, there's disappointment around 1.62 degrees Celsius, at the same time, there's a lot of momentum as we decarbonize our economy.
Is the momentum exactly a good one, especially looking at how this has panned out towards the end of the year with the COP and commitments on finance? Especially, there's a lot of emphasis on sustainable finance and other things. So what's your take on that?
That's a great question. On the one hand, the news cycle provides a lot of opportunity for reading about doom. And at the same time, there is a significant amount of information that is scary in of itself. At the same time, sustainable finance is now is becoming standardized and used around the world. Let's first define sustainable finance. We can define it as a set of practices, standards, and norms and products that pursue financial returns alongside environmental, social, and government objectives. Within sustainable finance, of course, you have ESG as a subcategory in climate finance. Importantly, it's important to understand that while ESG is an acronym that was coined in 2004, the underlying metrics, some of them go back over 200 years. as we've discussed previously in the program, the ESG metric, how many individuals are on the board, it's a whole number, right? It's 1, 2, 3, 4. It's not going to be 1.2, for example.
Correct.
That was first used and required by regulators in 1811 in New York State. So what do we see here? We see a continued emphasis in 2024 on decarbonization of the economy. We see growth in China around investing in renewables. China invested almost $370 billion in renewables in 2024, which is 46% of the world's spend on renewables. There's been a lot of top-line concern over the new administration coming into the United States, but even through the lens of assets under management, when we look at the United States, only 11% of sustainable assets under management are in the United States itself. So the train or the ship has left the port, and we're moving ahead on the sustainability journey. The ocean's a bit choppy. There's going to be some ups and downs. And if the U.S., for example, decides to leave the Paris Agreement, which could happen under the new administration, that would only provide further impetus for global geopolitical partners of the United States to have their trust in the United States erode and decline. The Paris Agreement is not an agreement that exists in a vacuum. It sits alongside many other geopolitical agreements, treaties, and other processes that are in place. So what that means is if, for example, the U.S. decides to leave the Paris Agreement, those other treaties themselves will be in doubt going forward.
Before we get to the US and what's going to happen with the new presidency, let's start with Europe, because I think I recently read about reports coming out of Europe that were looking at what is Europe's transition for decarbonization looking like, what is the European Union doing. So you didn't mention that this transition we are set and we are just transitioning. So there are multiple ports, there are multiple markets now. China is a big market, but the European Union is also a key player. And if we were to look at in terms of progress and percentages and targets wise, most of the European states have pretty aggressive targets. So how is the landscape there?
Of course, the business culture here in Central and Eastern Europe, I live in Austria, is more regulatory driven than innovator driven. Yet at the same time, what we find here in Europe overall with the upcoming Carbon Border Adjustment Mechanism, CBAM, that's in place and will expand in 2025. The expected beginning of the EU Deforestation Risk Protocol that looks at supply chains, and the update of the EU Plastics and Plastics Waste Protocol. What we're seeing is a set of industries in the EU themselves that are beginning to actively transition their supply chains, their operations, their products, and their waste management to a sustainable economy. While it is, of course, driven often by regulators, there is a significant need and also an interest at the same time inside the EU to create mechanisms to support small business, enterprises, and innovators. Mario Draghi had a report on this that came out 2 months ago where they described how there are no unicorns, using a tech phrase for a startup that grows to be $100 billion or greater in the EU.
Correct.
And there are many different reasons why. Some of them are because it's 27 countries as opposed to one country in the United States. So therefore, the size and locations of capital markets are different in how they function at the national level and international level. At the same time, there is in the EU a significant advantage in 2025 is what we forecast, because you have very high quality products that are being produced and high quality of labor. At the same time, we're seeing a depreciation of the euro versus the dollar. And a forecasted new administration in the United States with an expansion of tariffs that would only increase the value of the dollar versus other currencies globally. So it makes the EU more competitive to US markets. And at the same time, if the US decides to impose some of the tariffs they have suggested, the products that would be purchased otherwise may come from the EU now. So we could see a competitive advantage in the EU in 2025, both on efficiency gains around sustainability and then also on international trade.
You do mention about the competitive advantage that the EU has, but there are, as I see, like a bit of challenge. Like you did mention about the carbon border adjustment mechanism that's coming into place, which a lot of countries are keenly watching on how it will impact the trade deficit between them and the European Union and countries. So that is something that a lot of countries are taking note of. And the other part is like even within Europe, Germany, France, there's a lot of political uncertainty. So with the key major countries now in kind of political instability, so like how do you think this is going to shape up? And also Middle East closer to EU is also a challenge. So do you think the progress that Europe has shown in the last few years will continue?
Absolutely, it will continue. There will be some frictions on the margins. At the same time, there's going to be the opportunity to grow certain markets.
That's good. That's good to know. Now, before we get to the new presidency, like how do you rate the Biden presidency in the US the last 4 years? As someone who has worked in the markets very actively during this period, how would you rate the presidency? For starters, I think a lot of regulations came in place. The IRA, the Inflation Reduction Act, was something that a lot of people felt was positive. Department of Energy's loan program office has been very active in supporting a lot of startups. You did mention about startups getting to unicorn status. So all this has been a positive side as a neutral observer from far. But what's your take on the administration?
I think they've done an excellent job when it comes to environmental justice, environment, climate, biodiversity, and overall land use management around from a climate and sustainability perspective. There's always things that one could wish they did more of, but if we look at the IRA with the Inflation Reduction Act, what's most interesting about the IRA is that 77% of the announced clean energy projects are in states that that were won by the new administration, and that accounts for 92% of overall investment. So North Carolina, South Carolina, Georgia, Michigan, Indiana, Texas, Ohio, Nevada, Arizona, Tennessee. So if the new administration wishes to unwind the IRA and remove the production tax credits and other mechanisms, what they're looking at doing is defunding and decreasing manufacturing and energy activities in these core 10 states. In fact, the IRA has been a leading source of job expansion in those states. So if they unwind the IRA, they're putting people out of work. At the same time, the U.S. has never produced more hydrocarbons than it has right now.
Correct.
The U.S. has become a leading petro state. There's pros and cons around that, which are a bit beyond today's conversations. Suffice it to say, from an absolute climate perspective, each additional ton that's emitted to the atmosphere is one more ton of carbon or methane or nitrous oxide that creates that much more risk to the overall economy and to society itself.
So while IRA has been a success, as you rightly said, US is an active producer and it's like an oil state in itself. And with the new president coming in, it's going to be in a lot of drilling. But do you think that will sustain with a lot of momentum now towards renewable energy, manufacturing, and with all the tax incentives that have been in place? Do you think the old narrative, all the old narrative from the previous term when the president was in office, do you think that will hold good? Or do you think, or with the new advisor to the president in Elon Musk, do you think things are going to be a little different in the new presidency?
What we can look at is history and recent history. Of course, history does not repeat, but it rhymes. So in the 4-year period when this upcoming administration was in the administration of the U.S. government from 2017 to 2021, they attempted to roll back over 100 environmental rules and climate rules. That resulted in 135 litigation outcomes, of which they lost 75%. Of course, this time around, they may have more people with experience and better understanding of legislative, executive, and judicial processes.
Correct.
At the same time, these policies are more embedded in more in place, so it's going to be much more difficult to remove them.
Fair.
And we have fundamental issues that the state of California is this 5th largest economy in the world.
True.
And so just as one cannot have a global corporation and not consider EU 27 policies and regulations, one cannot have a global corporation and not consider the state of California policies and regulations unless they want to be excluded from that market.
That's true. Now, when we look at the other topic that's of keen interest to all of the listeners in this episode now, ESG, the US has been seeing a lot of anti-ESG activism of late, and you have been in the forefront of kind of facing a lot of legal battles, if I may put it that way. Now, do you think will the anti-ESG momentum pick up more momentum, or will it lose steam?
I would suggest that we might see both.
Interesting.
On the one hand, there may be more reactive proclamations by tweet, right, regarding banning ESG. At the same time, it's impossible to remove ESG from the fundamental skills and processes embedded in doing financial and investment analysis. If we think of the metric I mentioned at the beginning of the podcast, remember, reporting the number of people on the board annually. It's a whole number.
Correct.
It's 5, it's 7, it's 10. That is a common ESG metric within the pillar of governance. If one bans ESG, is it illegal for me to consider how many individuals are on the board? I honestly have no idea how one bans ESG. One can lever and consider whether in the transition to net zero, we are basing our analysis on a set and discrete set of prices for carbon and carbon offsets. So embedded carbon in processes inside a corporation. Many corporations use the cost of carbon for their internal budgeting. Then there's carbon offsets and carbon removals and other pricing mechanisms around carbon. Those are determined by the client and the client's needs. Those are not determined by a group of organizations around the world working privately. And so even that argument, which is the basis of the argument of the current lawsuit between the state of Texas and 10 other states and Vanguard and BlackRock and Fidelity, I believe it is, it doesn't hold ground. What happens, though, is that we could see both reactive tweets and executive orders and reactive judges issuing policy. But only 11% sustainable assets under management are in the United States. That would not impact the commitment of Singapore or India or UAE or different European countries like Germany or Norway. So in the end, what happens is some larger U.S. organizations may be impacted. I think there's an opportunity for to grow market share for those if they lose some of their market. And finally, as we've seen in Texas in the last 2 years, if one, as Texas has done, ask banks that have climate commitments to no longer function in the state, in particular in the in their DCM, debt capital market team, and issuing municipal bonds, that's increased costs to Texans by hundreds of millions of dollars in extra issuance costs. In the end, the anti-ESG processes and suggestions that our people are making only increase market friction and make markets much less efficient.
You did mention a few times about the word tweet. I should ask you this because the person who owns the platform now has been a long-term skeptic. He has in fact vocally been pushing for reasons why Tesla is ranked below certain companies like Shell, for example, in the ESG ratings. And now with him being a part of the administration looking at efficiency improvements, so do you think he can actually flip the momentum in the right direction and positively impact the ESG frameworks, ESG legislation, and the requirements in general in the states?
I can't speak to the ratings of Tesla or Shell. I don't have that information available right now.
Sure.
What I can speak to is that the Department of Labor ESG rule that allows fiduciaries to consider ESG factors when they look at financial performance, that may change. The SEC climate risk disclosure rule may be on hold. And similarly, the SEC funds name rule, which is similar to EU taxonomy rule, may be on hold. Regarding the work that one does as an analyst, whether a credit analyst or an equity analyst, or working in the ESG space more broadly, individuals are no longer saying ESG. They just say non-financial factors. And finally, the financial data is clear. Morgan Stanley did a meta-analysis 2004 to 2018 of over 11,000 mutual funds. And those that embraced and used ESG metrics as part of their sustainability philosophy of those funds, for 3 factors, all either met or exceeded performance of those who did the dirty funds. If you think about it that way. First factor was on risk-adjusted rates of return.
Okay.
They had similar risk-adjusted rates of return. On the second factor on downside risk, the 11,000 funds, in the 11,000 fund universe, those that were sustainable had lower downside risk, which means if Fund A is sustainable and Fund B is not, and there's a market correction, Fund A that is sustainable, its overall net asset value would decline less than Fund B. And the third factor is regarding what one could consider as a contagion risk or extreme risk. And that's when there is significant market collapse. And in that case, we find for sustainably based equity investments, a significant outperformance versus those that are not. They're much more stable. Interestingly, in a book that we have edited as Responsible Alpha and written some of the chapters for the Inter-American Development Bank, and we do not know when it's going to be published. This is up to the bank. One of the chapters looked at pairs of bonds, green and plain vanilla. And when one looked at the two bonds and compared their performance during exact periods of time, looking at crisis, in this case over COVID and during the COVID pandemic, those that were green significantly outperformed, having been less volatile and much less risky, and held their value over time versus those that were brown. So that in the long term will drive capital. Will capital move less quick now versus in this given the upcoming administration, if compared to the other administration that could have been elected in the United States? Potentially. Is capital going to move to conserve itself and address, because the risks of climate change are systemic and they're also idiosyncratic? Yes.
I'll take that as a slightly positive note. Now, looking at 2025, what are your thoughts? Can we be more optimistic about how things are moving, both in the ESG front, sustainable finance, and with the new administrations coming around all around the world? So, are you more optimistic about things moving in the right direction in 2025?
Let's define optimism.
Fair.
What I mean by optimism are the necessary actions to resolve these systemic risks going to be more clear, concise, and precise? Yes. Is it going to be clearer which party one is attending? Am I attending the party that wants the business as usual and wants a fossil-free future? Or am I attending the party that wants a sustainable future? Those camps are clear. So that clarity does not provide optimism. Instead, it provides hope. Hope being that which we rely upon as a set of principles during times of difficulty. So the rapid deployment of renewables is, for example, causing in some circumstances negative electricity rates.
Correct.
The extraordinary rate of decline in battery prices has increased and improved the economics of storage.
True.
That changes grid stability. On the other hand, data centers are increasingly consuming more and more in large quantities of electricity. Some suggest 10% of greenhouse gas emissions by 2050 will be from data centers. So there is a significant need for on-site and near-site renewable energy for data centers. Some are looking at small reactor models for nuclear, which has caused a mini and very specific revival of that subsector of nuclear. The EU Packaging and Packaging Waste Directive will be updated. The question there is, while that's a regulation, does that spark business innovation and innovative small, medium enterprises throughout the EU to adopt sustainable packaging as a product they can sell? I can tell you, having lived here now for a significant part of my life, in the EU, we see year over year significantly less plastic packaging and less packaging overall, which is very nice.
That's good.
The International Maritime Organization is expected to adopt a global carbon pricing mechanism similar to CORSIA with the aviation sector. And that's pushing innovation for biofuels and such as clean methanol and clean ammonia. The sustainable aviation fuel criteria in the EU is that it'll be 2% of all supplied and consumed fuel by 2025. And we had almost 1.7 trillion in transitional technologies investment in 2023. So we can't put the boat back in the port. We can't put the train back in the station. Sustainability is moving forward. The issue, though, is we have two economies. You have the economy of those who have access to capital and have significant investments, and those who have less access to capital, less opportunity for significant investments. And we need to create a more fair and equitable society and not segment the society with those who have the ability to mitigate, address climate change risks, and those who do not. One thing that is very clear is that if we look at the top 1% of the population globally, or 1/10 of 1% of the population globally, their greenhouse gas footprint is a magnitude or many magnitudes greater than those who have less, who have less overall wealth, and we need to address that. So I see opportunities for standardization on products and on services. What we're seeing at Responsible Alpha is an increasing demand for our ability to link scientific data, starting with satellite data, all the way through climate modeling, into the financial, and into how an institution or organization functions, into its operations, then ultimately into the financial products that are the basis of that institution or organization, and even financial accounting. We have quite a few case studies on work that we have done for clients on our website. So the ability to link and apply scientific principles rigorously and accurately to address the sustainable transition we need to achieve is becoming more standardized. In fact, ISO, the Global Organization for Standardization, has a new ESG protocol. So am I hopeful? This year is the coldest year of the rest of our lives. Next year will be warmer. Are we moving in the right direction? Yes. Are we moving quick enough? Not at all. We're on track to 2.6 degrees Celsius, which for many parts of the world is unlivable, which means hundreds of millions of people would be unable to live in those locations. So we have to solve the climate crisis and address it with the capital that we have. And everybody's voice is incredibly important in this process. And so again, for us at Responsible Alpha, in our articles of incorporation, it states what we do. We're a public benefit corporation. It says Responsible Alpha partners with all organizations in their transition to a net positive economy by 2050. We will work with every organization in the world, whether it's in the commercial sector, in the financial sector, the government sector, or education sector, to support them. We've been working with institutions in Nepal, and we would love to work with institutions in other countries throughout Asia, for example.
Fair. That's like a wonderful note to kind of wrap this conversation, Gabriel. It's always a wonderful time having these conversations with you. We speak online, we speak on the podcast, and every time you do give a lot of insights into how the markets are moving globally. There are a lot of negatives. You do bring out the positives, and although you say it's not very optimistic, you do throw some optimism in the conversations. So thanks yet again for taking time to join for yet another conversation.
It's such an honor to be here with you, Girish. Your listeners are wonderful people to work with in their organizations, institutions, and I look forward to hearing from everybody.
Things move fast, and between the time of the recording and the release, a lot of points that was anticipated has happened. The new US administration has officially pulled the plug on COP yet again. Well, the wider repercussions are yet to be seen, but it is definitely a bump in the road. On the other side of the pond, the Carbon Border Adjustment Mechanism takes effect in 2026, and that will definitely shift the trade dynamics in the EU. And some predict that could make Europe competitive in comparison to the US in international trade. So we definitely will see a lot of activity over the next few years for sure. So get ready and enjoy the ride. MissionShunya@gmail.com is the ID for all your feedback as always. And not to forget, special mention to Jacob and Team Terra Generation for all the artwork. Terra Generation is a content agency specialized in telling stories around climate, biodiversity, and sustainability. So, until next time, when a new series will come up, this is Girish Shivakumar signing off, and as always, thank you for listening.